Hello and welcome to our Abbotsford real estate market update for July. Interest rates have increased last month and concerns over housing affordability have been dominating the headlines recently. But the question on everyone's mind right now is, can we expect this trend to continue for the next few months? Well, over the next couple minutes here, I'll be talking about how the Abbotsford market fared last month, as well as briefly touching on the interest rate hikes and what that can mean for you. I'm Hudson Hoffman, your Abbotsford Realtor, and if you have any additional questions or if you're looking for more information on any other cities in the Fraser Valley, feel free to reach out. All of my contact information is in the description below, or if you'd prefer, you can book a time straight into my calendar and I can reach out to you directly. Let's kick things off with detached houses. In Abbotsford, the average price for a detached home went down by about $150,000 in July, or 12% when compared with June. The main reason we're seeing that is with these recent rate hikes, townhomes and condos have just become more attractive to buyers due to their lower price point and decreased barrier to entry. That being said, we did see 23 more listings in July, although sales activity was down about 37%. This isn't super surprising though, as July tends to be historically a much slower month in the real estate market, and we expect those numbers to come back up during the fall. Next up, let's talk about townhouses and condos. Now, the average price for a townhouse or condo actually went up in July by about $4,000 when compared with June. I attribute this more to an increase in demand, as people are finding townhouses and condos more affordable with these recent rate hikes compared to their detached counterparts. That being said, we did see 9 less listings and 31 fewer sales in July when compared to June, but I would contribute this more to July being a much slower month rather than other environmental market factors. Now, a big thing weighing on a lot of people's minds right now, and the biggest change in the real estate market last month, was when the Bank of Canada increased its overnight rate by another 25 points up to 5%. So what this increase basically means for you is that for every $100,000 borrowed, you're paying an additional $14 per month with the 25-point increase. What that means is on a $400,000 loan, you're looking at an extra $56 in monthly payment. Now, the next announcement from the Bank of Canada is in September, and economists can't seem to agree on whether or not we're looking at another rate increase or if they're going to leave things alone. We'll probably just have to wait and see what happens in September, but I frankly wouldn't be surprised if they do bring it up another 25 points to 5.25%. So what does all of this actually mean? Well, for the past few months, we've been in a really strong seller's market with an above 18% sold to active listing ratio. The past few months, we've been seeing a bit of a decline towards a more balanced market where buyers and sellers both have equal negotiating power. Now, the question that a lot of people have on their minds is right now a good time to buy or sell, or should they wait and see what's going to happen? Now, the answer for that, unfortunately, is a bit too broad for a YouTube video. There are a lot of personal factors that are in play that affect each individual differently. If you would like to know if right now is a good time for you personally to buy or sell, please feel free to reach out to me directly. All of my contact information is in the description below, and I'd be happy to help. Or if you'd prefer, you can book a time directly into my calendar using the link in my description below, and I'll reach out to you personally so we can have a good conversation about what is the right time for you to make a move. Thank you all for watching, and I'll see you in the next video.